Hello. Hello, everyone. Are we streaming live?
Yeah.
Hello, everyone. So basically, I just want to welcome you to the Xend Finance DeFi Hackathon 2021. Welcome to our first panel session with an esteemed panel of guests. This is Building Real World Solutions, Bridging Decentralized Finance with the Real World. I want to take a moment to kind of introduce some of our panelists right now who've taken the time to present to us. This is the largest hackathon in Africa's history. We're very excited to have this team. Of course, we have Julian Tan, the BSC Ecosystem Coordinator for Binance and Binance Smart Chain. Binance needs no introduction, of course. They have their hand in everything related to blockchain and crypto. We were the first, Xend Finance was the first company to build on Binance Smart Chain out of Africa. They're one of our investors. And so we're very excited to have Julian. Also, we would like to welcome Arjun Kalsi. He is the head of growth at Polygon. Polygon, of course, is the Ethereum's internet of blockchains. They are one of the hottest companies to, basically hottest protocols, hottest platforms to come out in the last few years. Mark Cuban actually invested in them just a few months back. Also wanted to introduce our Vijay Garg, who is the CEO of mapleblock Capital. He, of course, has worked with all of the major banks in the world: J.P. Morgan, Goldman Sachs. He has 16 years experience working in the crypto and finance space, doing forensics analysis. But we are very excited to have this great group of panelists. And first off, we want to introduce Julian Tan, who's the BSC Ecosystem Coordinator. He will be giving a 10 to 15-minute speech, and then we will move on from there. Julian, thank you for joining us.
Hey, Kevin, thanks for the kind introductions. And once again, thanks to the Xend team for having me on this panel today. So if I could quickly share my screen, I like to basically talk and share some of the insights that I see as well as what BSC has been doing. Basically along the lines in terms of some of the traditional finance issues as well versus DeFi, and how BSC is helping to solve real world DeFi problems, and what can people actually expect of BSC as a tool for developers around the globe. So let me share my screen. Cool. So as Kevin has introduced, I'm the BSC Ecosystem Coordinator, and I'm here to talk to you about traditional finance as well as DeFi, right? I think a lot of people actually understand what's going on between traditional finance as well as DeFi, but for those people who don't know, there is a trusted system in DeFi, right? So that means we're cutting out all the middle people. You no longer need to have a third party, a bank, a person, or any other intermediary that could operate between you or your assets, right? As well, the concept of trustlessness basically is a core element of the blockchain, achieved via the utilization as well as execution of smart contracts. By cutting out all the middleman, transactions can now happen a lot faster and cheaper, and that's why DeFi right now, in a more global perspective, is gaining a lot of traction. And you see that happening every day with TVL, the utilization of the blockchain, not just on BSC, but you see that happening on Polygon, you see that happening on Solana, right? And we definitely think that this could swell up as the days and the year goes by, as well as the sophistication of the blockchain technology, as well as smart contracts improve. So in BSC, we have about 1,000 different projects currently live, all serving different part of the DeFi ecosystem, right? We have some of the more famous ones like Cream Finance, Fortube, Spartan Protocol on lending. For wallets, we have a couple of them as well. The more famous ones are like Math Wallet, Coin98, Trust Wallet, Swipe. We have also, for stable coins, we have quite a few, right? We have Curve, we have Ellipsis, BUSD, BDollar. They're all supported and or supporting our ecosystem as well. And for you farming as well as Launchpad, those are definitely things that most people are interested in, how to make your money grow, right? For you farming, we have some really cool ones like DeFi Finance. We have Alpaca as well. And for Launchpad, right, we have PancakeSwap, Hotcross, BSC Pad, and just to name a few. It's impossible for me to name all 1,000 of them. So if I missed out any of these projects' names, no hard feelings. So if you zoom out and we start to look at how the DeFi versus traditional finance space has developed over the last couple of years, you can quickly see that, in terms of the gross value locked and versus the net value locked, the growth of DeFi has been exponential, right? And this is only the beginning, considered that, this is a fairly new kind of thing, or fairly new kind of waters that we're all venturing into. And I would expect this chart to be a lot more steep as well as bigger as the industry develops and more ideas start to come up in terms of what people are able to achieve, the autonomy that people are able to achieve when it comes to smart contracts, as well as the utilization of the blockchains. And you see it right now, right? Through GameFi and that kind of stuff. So zooming into some of the key infrastructures in terms of the BSC DeFi ecosystem, we obviously at the core of every single DeFi ecosystem, you would have stablecoin, yield farming, decentralized exchanges, lending protocols, as well as the collateralization of real assets, right? So this is what we at BSC over here view as one of the crucial elements, or what they call it a DeFi Legos, that would allow other kind of applications or other kind of economies like GameFi to actually build on top of them, giving rise to new industrial, new economical models using what has been developed by these applications, right? If you compare them to traditional finance, you realize, like, for stablecoin yield farming, right, you're earning interest rates on your stablecoin pegged to the dollar, right? That in the traditional finance world, it's something called a savings, a fixed deposit account, where you actually deposit your fiat, earn interest from those, right? On decentralized exchanges, obviously in traditional finance, it will be probably stock, commodity brokerages, or even FX, that kind of platforms, maybe like Robinhood, that kind of stuff, right? For lending protocols, then you could easily compare them to bank loans, as well as the traditional finance lending system, and collateralization of real assets. That's also there in traditional finance with mortgage facilities, right? Or attestation of certain assets that allow you to get that kind of loans from your traditional financial kind of institutions. So of course, with all the good things about decentralized finance, as I've just said, DeFi is still really in its infancy stage, and there's a lot of issues right now on DeFi, right? Issues such as smart contract vulnerabilities. We have volatility in digital assets as well, just to name a few. But the whole issue is that self-custody is one of the major issues, as the entire system requires everyone to be responsible for their own assets, right? So if you look at the characteristics of the blockchain, where the blockchain transactions are immutable, sometimes it's very hard to actually reverse a transaction when a transaction has been made, right? So, or if you lose your private keys to your wallet, then that could be like a huge thing for you as a user. So how is BSC helping to bridge this gap between decentralized finance and centralized finance? We have several things that could allow developers to easily just come in and build their platforms or their protocols on BSC, right? The first of which is obviously the Priority 1 campaign. So for people who are not very familiar with what we've been doing, the Priority 1 campaign is basically a campaign where we are leveraging off our own BSC accelerator funds and helping projects that are building on BSC to actually have more money to actually post out for white hat hackers and those kind of hacking syndicates to actually come in and give a shot at hacking the protocol itself, right? And obviously, if they find any kind of critical or high issue kind of bugs that might lead to a jeopardization of users' funds, then obviously we will help the project to pay out a certain percentage of the bounty that they put up, right? Another thing would obviously be the Binance Bridge. This is something that we feel also definitely helps to bridge these decentralized finance as well as centralized financial world, is because in the earlier days of blockchain, right? I think in 2017, 2016, if you're looking at like switching an asset on Ethereum to a different one, like maybe probably like Binance Chain, you're going to have a lot of issues, right? But today, it's so easy, right? So easy to switch between your Bitcoin on Polygon, your Bitcoin on the Ethereum network, or even your Bitcoin on a BSC, right? And a lot of this that we do, the facilitation that we do is through the Binance Bridge, right? A lot of these assets are now also on Binance Bridge. Just for example, like today, earlier today, we are finally bringing Solana and a few other kind of tokens that wasn't previously on Binance Smart Chain, but now to Binance Smart Chain. So you're able to exchange your tokens and access from even different kind of platforms, even for Solana to come in to BSC and use, or onboard to any of the protocols that you have interest in. Obviously, for us, we also have partnership with several audit firms, right? Just to name a few, it's like Slowmiss, Paxio, Sodic. We have green lane arrangements for each and every of these auditing firms. I think I'm not too sure about if you're building on another protocol, but for BSC, if you are going for an audit, the average waiting time is about 2 or 3 weeks, right? So that could help you guys gain that kind of confidence, as well as it allows your community to have that kind of confidence knowing that your code has been reviewed and looked at by a reputable firm, right? As previously I mentioned about the Binance Bridge, we also have something called the B tokens, which is like what, without going too much in depth in terms of what these B tokens are, they're basically tokens that are on different kind of protocols that have been issued on BSC, right? So it's really easy now for any kind of developers to base their native token even on a different protocol to come into on BSC, right? Because we can easily get these kind of B tokens available for liquidity through the Binance Bridge, or through some of our liquidity providers, and allow you to quickly bring over all your assets to BSC and run the show as per normal. Another thing was obviously is DeFi Legos. I think what I take pride in, as well as I'm pretty sure I speak for the rest of the BSC team when I say that we have a pretty solid as well as comprehensive foundation in terms of DeFi Legos, which could then allow anyone to come in and build more complex kind of yield farming protocols, or even build an entirely new ecosystem based off the kind of DeFi Legos foundation that we laid out, right? Another thing that I definitely wanted to say how we're helping to bridge this gap is through the MVP program. For people who have been keeping up with us, the MVP program is where it's like we gamified the entire building program, right? For developers who are actually building that, any of these projects that gain the most amount of traction, they would be able to gain like several cool stuff from us, right? From the BSC team, sometimes you do investments or even grants for projects that come through this MVP program. And if you actually look, the Binance.com more centralized exchange as well helps to support our initiatives by giving us a prioritization for projects that are on BSC, right? So with this MVP program, it's like a fast track acceleration program, which allows you guys to easily grow with BSC. We also have high performance infrastructure that has been built in the BSC. And there are several really cool things that are coming on, such as we are about to, I can't say too much, but we are about to give a really good and solid solution in terms of the GameFi issues that we currently have amongst the entire blockchain ecosystem, not just BSC. A lot of these games are actually limited by low TPS as well as high gas fees, right? So we are constantly looking at our existing infrastructure as well as improving that, so that we help to provide an optimum kind of platform for any form of developers to come in and build on it. So for our tech roadmap, right? The first thing is definitely interoperability and composition. We definitely, our team, imagine a world where eventually every single protocol you'll be able to onboard via different blockchains, right? So the people at BSC, we are definitely for this kind of interoperability when it comes to protocols, right? On our tech roadmap as well, we are prioritizing high performance EVM and infra optimization, right? Some of the things that I was suggesting would be a faster block finality, right? We are also looking to start to provide more light node support for archive APIs as well as stream, as well as resolving all these storage bottlenecks, as well as the concurrent execution of the EVM. And of course, network enhancements, right? We would also be supporting on-chain randomizers in time to come, as well as we are looking into privacy preserving solutions as well that could help safeguard your privacy whenever you're on board through a chain like BSC. Right. So that's actually what I really wanted to share with anyone who's tuning in. If you're interested to learn more about BSC or take part in any of our programs, feel free to reach us at these various links, Twitter, Telegram, developer Telegram community, or even reach out to us in terms of if you think your project's really interesting and you think that we might be interested, reach out to us through the BSC Accelerator Fund. Thank you.
Julian, thank you very much for that presentation. That was very informative. Anyone, if you have questions out there, we do have a contest going on right now. You can go on our Telegram channel. That's Telegram. It's Xend Finance, XEND FINANCE. You can also go on our Twitter, leave some questions there in the comments. The top 10 questions will get a $300 prize. So save your questions, send them there. Julian's free to answer them afterwards. But before then, I want to now move on to Arjun Kalsi, who's the VP of Growth at Polygon. He's been there, and Polygon, of course, has been they have their hand in a little bit of everything as well, just like Binance. So without any further ado, I'll let Vijay, are you there? Or Arjun, I'm sorry, yeah. Arjun, are you there?
Yeah.
Okay, great. I will introduce Arjun right now. He's set to go live. And so Arjun, please, your camera, please.
Sure thing. I hope you guys can hear me and see me as well. So great to be here. And I'll not take too much time and I'll jump right into it, but very excited to talk about what's happening with DeFi and how Polygon is thinking about it. So let me try and share my screen. And what I wanted to do was, as a part of this presentation, just cover some interesting ways of let's say thinking about DeFi. Like, for example, when you have decentralized finance, like how do you think about decentralized finance? How do you what are these different Legos and how they work? So I'll just go live, and I hope you're able to see my screen. So I just wanted to start with like a quick brief about Hi, can you guys hear me? I don't know if I got dropped off.
You got dropped off for a second, but I think you're back on. Yes.
Okay, I'm back. Okay, all right. Yeah, the internet gods are not on my side today. All right, so I'll just give you a quick brief about Polygon. So again, we started in 2017. Our objective was to try and scale the Ethereum ecosystem. Of course, there were scalability concerns ever since the 2017 CryptoKitties episode. I don't know how many of you remember, but this is a time when Ethereum just stopped working because of a cat game, and of course serious questions are asked. So that's kind of where our story started. And again, what we built in a few words would be a very fast blockchain with a 2-second block time. Something which is EVM compatible and uses the same sort of assets as Ethereum. So the same ERC style assets which developers are used to, and in users as well. The transaction costs are like super low. So we built a blockchain where for about $10, you can do over 1 million transactions. And of course, we also checkpoint all the transactions periodically onto Ethereum. So we Merkle root transactions every let's say 256 blocks. and put that transaction on Ethereum. So you get security on our network as well, which is a proof of stake network with over 100 validators, so very decentralized. But then you also get security on Ethereum because all your assets are discoverable on Ethereum. And when you have something which is fast and inexpensive, that's when you can start building for user experience, right? So the UX has to be really good for users because most of the users in the world are used to like using, let's say, a mobile phone or accessing the internet and are used to a certain kind of, let's say, digital experience. And whatever blockchain technology or whatever DeFi or gaming or NFT you build, it has to provide the same, if not better, user experience. Otherwise, you're not going to get mass adoption. And of course, we've got a large community, over 700 apps down, onboarded, close to 1,000 now. We're doing over 6 million transactions on a daily basis, and we've got a large amount of DBL. And yeah, and I would dare say we built a very compelling technology, and which has seen unprecedented adoption as well. So what I wanted to do is I'm just going to jump right into it. Also on the adoption side, so there's so much more when it comes to DeFi, right? So every major tier one DeFi protocol you've heard of, whether it is Aave, Balancer, SushiSwap, or Curve, are live on Polygon. We've got a huge ecosystem in DeFi and in NFT and gaming. And what that does is that allows this degree of composability, allows this interesting mix of using GameFi and some of the things, which we've seen have become very popular with NFT and DeFi and all of these things combining into metaverse concepts and that also creating entirely new types of economies. So we've got a very large ecosystem. I encourage you guys to take a look. But of course, this conversation is about DeFi. So what I want to do is I wanted to talk about DeFi, but in a slightly different manner. And I wanted to talk about, how you need to think about DeFi. Like generally, like if you come from, let's say, a centralized finance world, like what is DeFi and how you think about it. And essentially what you really need to discuss in this conversation is DeFi composability, right? So what is DeFi composability, like decentralized finance composability? The composability is that when you're able to build a DeFi ecosystem where you have apps, which are like we discussed earlier, like Legos, where you have lending and borrowing, and then you can add maybe leverage on top of that, and then that allows you to build other kinds of synthetic assets or derivatives or options. This is kind of what DeFi composability means. So by using these certain Legos, just like in centralized finance, where you have a bank which does basic lending and borrowing, and then you can build like an entire stock market on top of it and all these different financial instruments. The decentralized finance works in quite the same way. So you need these Legos. The biggest advantage here is like there is no middleman. So as a result, all the profits or rather all the optimization in terms of resources are basically are given to the user. So the user basically benefits from that entire margin, which is typically eaten up by middlemen in a centralized finance world. And essentially the functionality of one protocol can be utilized in another protocol. And this is kind of what makes decentralized finance very interesting, that how all of these different financial instruments are kind of linked together. So it's not really like, it's very different that way from a centralized finance kind of concept where you have a stock, and the stock is fundamentally different, or from, let's say, a mutual fund or a different kind of financial instrument. Like here everything is kind of interlinked, and this makes it super interesting. And why is composability important? Because you can basically do things like you can have high utilization of capital. It makes capital sticky as well, since all this capital is being reused in different places. It gives lots of different opportunities for developers to build like different kinds of things, because already a code base exists and some Legos exist, and now you can build on top of them. So you don't have to reinvent finance per se. And of course, composability encourages more users and more liquidity, and thereby more dApps. And without taking too much time, like I wanted to give you guys like a DeFi ecosystem breakdown. So if you were to look at it from a layers perspective, like on layer 0 is basically where you have all the different bridges and fiat on ramps. So this is kind of layer 0 is how you get liquidity or funds into a system, right? So the first step you need to do is get the funds into the system. So as a protocol, you need to be able to solve bridging, you need to be able to solve fiat on ramps. Once you have that, that's when the money markets come into play, right? So this is where you have your basic lending and borrowing. So think of all of this like a bank. where you have basic lending and borrowing, like people can lend assets and people can borrow assets, right? And once you have that, you can then build other interesting things. So let's say you have many different assets, you can then build dexes, right, which allow you to swap these assets, right? You can have fixed yield instruments like fixed deposits, right? And you can also build interesting things like margin trading, right, where basically you are now talking about leverage, right? And then you go one layer above, right? And you go from layer one to layer two, and then you go to layer three. This is kind of where you can take aggregators, which sort of aggregate all of these, let's say, fixed yield or DEX sort of yield aggregating instruments, and then sort of aggregate them. And these are typically your yield aggregators. This is kind of also where insurance comes into play, right? When you're building these kind of things. And then on top of that, further, you have auto compounding, you have derivatives, then you have synthetic assets, right? And right on the top of all of this entire money making ecosystem, of course, you need to have analytics, right? And then you need to have user facing tools like Zapper, etc., where you can do like other interesting kind of things, and you can make things easy for users to access DeFi, to monitor the yields and do those kind of things. So in general, DeFi Lego pieces can be organized across these 5 layers, right? And also it's interesting how capital risk and reward also increases as we move up the layers. So just like in a bank, you have fixed deposits where you may get less yield, and then you go to stock markets, and then you go to derivatives, and then you go to like options. It's the same in decentralized finance. So there are a lot of, let's say, similarities here. So if you are into, say, let's say, centralized finance, you've done some stock trading, you've done some investments, it'll be very easy for you to pick this up because a lot of the layers remain the same. I also want to talk about maybe going one level deeper, right? So like I said, layer one is your low risk DeFi protocols. Then you have medium risk. Layer three is more complex DeFi protocols. So layer three is kind of when you start getting into all of this auto compounding and derivatives, etc. And again, requiring quality human capital to generate superior risk and adjusted returns. This is very interesting because all of these kind of auto compounders and aggregators need, let's say, people to come up with these strategies where what are the different dexes and protocols you can use to increase the yield on your capital, right? And this is how so interesting because this is currently mostly a human job. Like there are people who are experts at designing strategies, and they look at all of these different protocols and figure out which is the best strategy to use. So suppose you put some money in there, you put some crypto in there. How do you get the best return? And this is what really makes it so interesting for me, that you have all of this automation and you have all of these smart contracts, but yet there is this very, very important human capital injection in here, without which you cannot get the best yields, which is so super interesting. And of course, you need all of these analytic platforms, right? So this is kind of where you can do these on-chain analytics and try and figure out what's happening. And of course, do other things and figure out where the yields are. And again, from Polygon's perspective, right, when we talk about building DeFi and CeFi, when you try to build that bridge, like what are some of the things you need to do, right? So if I want to break it down into 4 different things, number one is you need to ease the entry into blockchain. Right. So you need to make it easy. So if I were to just go back, this bottom layer, right, of bridges, of fiat on ramps, you need to make this super easy for users to enter decentralized finance, right, to try it. And this is kind of where what we've done is we've done integrations with a large number of popular wallets and large number of centralized exchanges as well, so that users and assets can easily access on-chain DeFi vehicles, right? So you can go from a centralized exchange to on-chain decentralized finance. And this is not just for users, but for liquidity as well. What we are also doing is building high performance infrastructure. So we have a very high performance chain, but we are already building for the future. We are actively researching ZK rollup technology and sort of other concepts like light clients to sort of build a next generation sort of level of scalability. Also, of course, you need all the DeFi tooling. So you need easy audits, you need access to liquidity. You also need some sort of privacy built in there. So this is kind of, again, where we're using zero knowledge technology, which can be used not just for privacy, but also for scalability. And of course, very important for us at Polygon is also decentralization and community, right? So we've set up like a DeFi DAO, and we want to set up more DAOs so that the community has a greater say in ecosystem building on what should be done, what kind of DeFi plus CeFi, or what kind of things do we need to do within the ecosystem to engage more users and enable a kind of, let's say, decentralized decision making. And just to jump into the next slide, I also wanted to just take a couple of minutes to talk about zero knowledge rollups. So we've recently acquired a company for about 250 million. This is Hermes blockchain, which is an optimized payments platform. And what we're looking to do is bring a big degree of focus onto ZK EVM technology. So we want to be able to build zero knowledge EVM technology so that your current code base on Ethereum is reusable, and you can inject zero knowledge features in there, not just for rollups to increase scalability, but also for privacy. And furthermore, after, as a part of this acquisition, we've committed $1 billion from our treasury towards building this zero knowledge privacy slash, or rather privacy plus scalability future, so that you can like supercharge DeFi. So this kind of just brings me to the end of my presentation. And I hope I was able to give you guys like a different kind of view into how to think about DeFi. So that's about it from my side. Thank you.
Arjun, thank you very much for that presentation. Very informative. Once again, if you have any questions for Arjun, you can ask that on our Telegram channel or on our Twitter channel. And of course, once again, there's a $300 prize for the top 10 questions. We'll be asking those questions at the end of the presentation. We have one more to go. Without any further ado, I want to introduce Vijay Garg. He's the CEO of mapleblock Capital. mapleblock Capital is a venture capital firm, and they are trying to bridge traditional finance with the blockchain and with DeFi. So he has a little bit of a different perspective coming from venture capitalists who invests in projects as opposed to being part of an ecosystem and a protocol. So Vijay, if you are there.
Yeah, hi, thanks Kevin for the introduction. Can you allow for me to share the screen?
So you will be able to share on your screen, and then just press the share screen and your presentation will come up.
Okay. Yeah, I'm not able to share the screen. Is there an issue?
Let's see. So the bottom section where it says share screen. Wait, does somebody Arjun, were you able to stop sharing? Okay, we see your screen. We see white screen so far.
Yeah, I'm able to, yeah, okay. Now again, okay.
Okay.
Can you see my screen?
Yes.
Okay. So thank you, Kevin, for the introduction. Hello, guys. It's a pleasure to meet everyone. This is Vijay from mapleblock Capital. And thanks, Xend, for having me in this panel. So let me share with you guys my thoughts and know-how on how DeFi is growing with real-world adoption. So we are going to cover three aspects within this topic. Those would be transformation of a business financial system, bridging liquidity, and bridging users. So before we jump into these topics, let's talk about what is decentralized finance, right? So we all talk about DeFi, NFT, and few other technical terms, but many of us, I guess, we do not really understand what these terms are in reality. So what is decentralized finance? Before understanding decentralized finance, let's break that into two pieces. First is finance, and second is decentralized. What is finance? Finance means management or exchange of money. So in simple terms, activities that are associated with investing, purchasing, renting, or leveraging, or borrowing, lending, etc. That is finance. And what is decentralized? Decentralized is a system which is not controlled by a single person or a single entity. Instead, it is controlled by a group of people. Example, I create a password of 1,000 letters, and each letter I give to 1,000 different people. So I won't be unlock a system unless and until I get those 1,000 letters from 1,000 different people. So this is called a decentralization. And what is decentralized finance means? Management or exchange of money in a system which is more open, transparent, governed, and not controlled by a single person or entity like banks, exchanges, insurance companies, etc. So let's quickly jump into our first topic, transformation of business financial system. So DeFi will change how the centralized financial operators like banks run their operations currently, and even has the potential to shift the structure of entire financial ecosystem at a macroeconomic level, which will definitely impact bottom line to SMEs. small and medium enterprises in the long run, and how they take loans, or how they accept credits, or how they do the remittances or the settlements. Since 2020, we all know billions of dollars have already been put into DeFi ecosystem, and this growth was mainly led by certain protocols or applications like Ethereum, primarily, I would say. There are others, definitely. So no hard feelings again. Let's understand this deeper through real world examples, okay? First example would be like commercial banks. So in case of commercial banks, their primary business model is to accept deposits and give credits. And between these two functions, these banks earn profits through arbitrage, or I would say through leverage, by providing more deeper liquidity into the market, traditional market. Whereas DeFi protocols enable people to borrow or lend money without any intermediary between unknown participants, and this can be done at any time, from any location, and with any amount. Interest rates are always transparent and set based on demand and supply. If there is more demand, it would be higher. If there is more supply, interest rates would be lower. Examples for such kind of protocols we already know in the blockchain exist, like Compound and Aave. Compound is more towards our collateralization of the assets, and Aave is more towards the is trying more towards the non-collateralization of the loans, like banks and financial systems. Second example is investment banks and issuer of financial statements. So current financial system is very complicated, wherein investment banks do a very detailed KYC on the investors, mainly institutional investors. We are talking about traditional finance, right? So definitely institutional investors play a very big role in it. And after a long wait, like suppose 1 week to couple of months, an account is open, where a specific private banker is appointed to deal with a set of clients. Main role of this banker is to give advice and create a pool of assets like commodities, forex trading, stocks, ETFs, bonds, etc. This current system is very complex from the start of opening an account to purchase in specific products, and sometimes the fees, commission, or charges the banks or bankers are also not even transparent. On the other hand, DeFi makes these transactions easy by offering tokenization of these products, derivatives of them. Example, synthetics. So synthetics it is a derivative protocol which allows trading of derivatives on assets such as stocks, currencies, or commodities.
So, sorry to interrupt you. Are you? Do you mean to change slides, or are you still on the table of contents slide?
No, I'm still on the first one. I don't.
Okay.
Yeah. So synthetics, like it's a derivative protocol which allows trading of derivatives on assets such as stock, currency, and commodities. Yun Finance is also another example that searches for the best yield products for investors within DeFi space and invest automatically for its users. The third example would be exchanges. So main function of an exchange is to organize trading of different assets, such as stocks, foreign currencies, between two or more people, right? And when it comes to traditional world or traditional finance, it can be referred to NASDAQ. And when it comes to crypto world, it can be referred to centralized exchange like Binance, Huobi, or OKX, right? And as we are witnessing, more and more decentralized exchanges are coming up. Volume is being shifted from centralized exchanges to decentralized exchanges. These decentralized exchanges allows user to swap or trade their assets with complete control of their private keys and at a price determined by the real supply and demand, and which cannot be modified or edited because it is decentralized, right? The fourth example of this would be insurance. Insurance is available in traditional world to mitigate the risk of fire theft. Although within DeFi or blockchain ecosystem, we only see Nexus Mutual kind of players who only covers the smart contract code risk, nothing else, right? So it is yet to grow. So there is a lot of possibilities for the integration from the traditional world into the real world, I would say, into the DeFi space. Fifth example would be central banks. Central banks issue the currencies that are controlled by them, and their currencies also possess very high risk of great volatility in case of economic crisis. Whereas within DeFi or crypto space, we have stable coins that are backed by a reserve currency, like one USDT is backed by one USD. Having said that, arguably, right? And they inherently encode the price stability as well. Now let's understand where do we stand as of today. So I would explain that in three ways. Well, first would be value transfer. So our total value logged in DeFi, stable coins, loans, credits are touching all-time high every single day we pass, right? And this means more and more fiat is flowing from traditional world to DeFi, no doubt about it. Although currently money first comes from bank account to centralized exchanges, they convert into crypto coins, and then transaction within DeFi takes place and gets stored into multiple wallets as per the user requirements. Second would be connecting different savers and the borrowers. In traditional financial ecosystem, borrower cannot contact lender directly without intermediary like bank, or more precisely, I would say lender cannot find the trustworthy borrower without intermediaries like banks. Development of stable coins and decentralized exchanges have already made this available for both our borrower and lender to directly deal with each other. Borrower can take money from lender directly, lender can lend the money directly to the borrower. Third would be competing for traditional finance funds. We have seen big companies, including listing companies, tech giants in 2020 and 2021, who have shifted their vision partially from traditional funds to finance to DeFi applications. It is not yet happened at mainstream level, but yes, advancement of DeFi is revolutionary and would take place. So this is where we are standing right now in terms of DeFi adoption in the real world, right? Now, third point is DeFi has a potential to outperform traditional finance. How we can say that? Through by seeing three points. One would be speed of growth. Jan 20, $700 million were logged in DeFi. As of today, billions of dollars. Room for growth, as per Messari, DeFi application are just 1.5% of total value logged in crypto market, and total household debt amounts to $48 billion. If DeFi just cover 0.1% of that debt, it means DeFi's current TVL will grow by 500%. Third would be new market sentiments. According to World Bank, 1.7 billion adults do not have access to banking services. DeFi is permissionless. Anyone can access these financial services. What they need: electricity, internet connection, and smartphones. That's it. They don't need any KYC. They don't need any documents. They don't need to meet a banker. They just need these three things. Now let's understand the role of DeFi in small and medium enterprises. Small and medium enterprises, what they do? I mean, what is their basic or daily routine? Remittances or loans, right? Current banking industry is very complex. We know a lot of KYC, documentation, meet in person, expensive. Banking transactions are expensive, cross-border definitely, and inflexible. But when it comes to the DeFi, all these problems get solved. Even if we see Tesla's purchase $1.5 billion in Bitcoin, although it was motivated by financial value of Bitcoin as an asset, not by transaction banking needs, but still it some way drives the value towards DeFi in the longer run. That if someone has invested in Bitcoin as a financial value, they will definitely jump into the DeFi in the bigger area, right? Our next concept is bridging liquidity. So within bridging liquidity, we want to cover our first topic, asset tokenization, which is very, very important. Asset tokenization, what is asset tokenization? We all are hearing about big giants like even FTX or few bigger companies doing the assets tokenization, right? But nobody really understands what it is. So it's a process where issuer creates a digital token on a distributed ledger technology or on a blockchain, which either represents the digital asset or physical asset. As simple as that. Suppose I have a real estate in Dubai. Okay, I can issue the token against that real estate, and that token becomes my asset tokenization. That process is called as asset tokenization. So blockchain guarantees that once you buy tokens representing an asset, no single authority can erase or change your ownership. Let's see an example. Let's take an example. Suppose you have a property of $500,000 in New York, right? And asset tokenization could convert ownership of this property into 500,000 tokens. Now you want to take a loan of $50,000. It doesn't make sense, right, for you to lend or mortgage this $500,000 worth of property just to take $50,000 loan. But in traditional world, you can't do that. You have to either lend this entire property or not take loan at all against this property. But what you can do through asset tokenization is you can create 500,000 tokens and transfer percentage of those tokens to the buyer. And this way, percentage of rights in the property will be transferred to the buyer as well. And nobody can challenge that. Seller cannot challenge that, buyer cannot challenge that, and no one can erase the ownership of the investor who has bought the tokens, or in this matter, share of a property as well. Right? Now, what kind of tokenized assets are there? One is interchangeable, like you buy BTC from anywhere in the world, it doesn't matter. Per BTC value will never change. Divisible, you can buy 0.0001 BTC, that is allowable. It also depends upon when you issue a token, you want to do the fraction or not. Non-interchangeable are generally NFTs, which can't be replaced because they can't be replaced with tokens of same type because each token represents a unique value. Although, I mean, some NFTs you can do like commercial real estate related NFTs or very expensive fine art NFTs, right? Now, what can be tokenized? You can tokenize anything, real estate, stocks, bonds, commodities to exotic assets like sports team, racehorses, artwork, celebrities, whatever comes in your mind that has a value in the real world, you can tokenize within crypto. And how it will benefit you. Let's talk about the benefit of tokenization, right? It will provide the greater liquidity. Like suppose you think you have a real estate or you have a very expensive fine art, right? It's very difficult to sell or move. It will remain in your balance sheet for a very long period of time. Access to broader base of traders within DeFi ecosystem where there are millions of users, it increases liquidity with more freedom and gets you sell your asset as soon as possible as well. Also, second benefit would be it is much faster, it is cheaper because all the tokenization of the assets are done through smart contracts. So when you transfer, it is highly efficient and cheaper as well. Very transparent, completely secured, recorded in blockchain, can't be amended. Other benefits, fair price determined by the market, reduced management costs, etc., etc. Let's take an example. Centrifuge is a very good example, I would say. So sorry to take their name specifically, but they've created a decentralized asset tokenization platform, which is specifically for the traditional asset royalties. So Centrifuge, I would say, is specifically made for reducing the cost of the capital for SMEs, smart and medium-sized enterprises, and provide DeFi investors with a stable source of yield uncorrelated from volatile crypto assets, basically. So having said that, from art to building, you can tokenize anything and fundamentally change how the current financial industry is being operated. But this has a lot of challenges. Regulatory hurdles, compliances, DeFi is still growing, infrastructure is not built yet, right? It's not robust enough to support the bigger markets, or determining the collateral value of the assets is very challenging. So these are the challenges that we are still facing within the asset tokenization. Now let's go into the, okay, this is about the ownership I've already spoken about. Now let's go into the institutional DeFi. So when we say institutional, immediately comes in our mind, oh, Tesla invested $1.5 billion in Bitcoin, or Michael Saylor is buying a lot of Bitcoins, more than 100,000, owns more than 100,000, or this guy is saying that, that guy is saying. Institutional means how the money is flowing from outside world into DeFi, not only in Bitcoin. So according to Fidelity Asset Management Report, 80% of companies considered investing in digital assets, not in Bitcoin only. And 36% of them have already invested in Bitcoin. There are two specific reasons why people want to come into digital assets as of now. Yeah, one is low transaction fees, definitely, and second is low cost. But this will change with the time, as and when we grow, and they will realize how super our technology is, what kind of applications are being built within DeFi ecosystem, like Arjun mentioned, the entire infrastructure, layer 0, layer 1, layer 2, layer 3, all these things are being built. And when people realize, apart from low transaction fee, low cost, there are such amazing things happening within the DeFi ecosystem. Definitely, more and more institutional investors will come into the crypto ecosystem or DeFi ecosystem. So I want to give a couple of examples also. Back in 2020, we saw that BitGo launched the prime trading, right? And as of today, there are more than 300 institutional clients that are using BitGo services, right? And SEC, I think in 2021 itself, they approved a very first and the last so far investment product from Arca, which is a cryptocurrency token related project to enter into the investment market. And there are three institutions who watch in DeFi because we are talking about traditional world. JP Morgan, they invested $65 million in Consensus, and other investors were MasterCard, UBS. Goldman Sachs, they invested $15 million in Coinmetrics and later on invested $28 million in Block Diamond. Bank of America, they owns more than 60 blockchain related patents as per their CEO. And the same month when he issued this statement, he joined Paxos Settlement Service, which uses a blockchain network to settle stock trades. Again, a lot of things I've said positively, but there are a lot of challenges as well. First, we need complex infrastructure, which is both secured and compliant. Lending and borrowing is highly inflexible right now, often built around our collateralized loans. So we need to change that. Last topic is bridging users. Bridging users pretty simple, right? How we will have more and more users. I know that we had 100 million users last year. This year it is changed to 200 million users. We are growing 100 million users per 6 months or per year. That's all good. But what we need to do is we need to educate people. Financial literacy is a growing movement amongst the youngsters for sure, but we need to educate all generation, every generation. And this is a good catalyst for DeFi to reach a mainstream level of adoption. There are a few parameters to understand these are. One of the biggest hurdle, aside from cost of operating a DeFi protocol, is the lack of know-how around safely navigating between wallets, liquidity pools, taking other crypto native buzzwords. I have like 16 plus years experience in corporate, right? I have led like a couple of $1 billion firm. But when I was dealing with the traditional investors, none of them have any idea what is DeFi, how DeFi works, what are the applications they are currently available or being built within DeFi or within the crypto ecosystem. So education is very small. That needs to be built. If we are talking about bridge between traditional world or real world and the DeFi, then this has to be done. Problem is intensified as the abstraction increases and the market volatility scares away interested users. Because sometimes we see, like recently, Bitcoin went down from 52 to 42 again. So this volatility is there in stock as well, but people do not realize. So there has to be more example, more education, more events needs to take place to educate not only the institutional investor, but the retailers as well. Last is navigating regulations. Many people, again, are not aware about the regulations, what is happening around the world. Indonesia started giving the crypto licenses. Middle East started giving the crypto licenses. India is talking about giving the licenses and imposing the capital gain tax, which is good because if you are holding the long assets for the longer term, your capital gain tax would be very, very low, right? And there are Salvador, definitely we know Bitcoin, he wants Bitcoin to be treated as a currency if World Bank gives the permission again. But yes, definitely there are many other countries who have already started giving the licenses for the cryptocurrency, storage companies, insurance company, wallets, applications, whatever you want to do within the crypto space. They have already, you comply with the regulation, you get your license and you can do multiple things. Regulation is happening as and when more regulation comes into place. Definitely we'll see more users, real users from real world or traditional world will be joining our DeFi sector. And it's not only one's responsibility. It's, I think, all of us responsibility to make sure that we bring the traditional finance into crypto space, and that is our objective at mapleblock Capital. Being connected to such kind of people from who are really high level of conglomerates in around the world. They definitely want to bring in a lot of money into the crypto space, and we are helping them doing that. And that is what we do at mapleblock, bringing their money into crypto space and invest into the real passionate founders who knows that what they are building and they are passionate about the thing. Their vision is strong and they are strong headed towards that as well. Thank you guys. Thank you very much.
Hey, Vijay, thank you very much for that presentation. Very informative, and I really appreciate everyone for participating and coming up with these panels. We do want to open this up to a Q&A session from our viewers. They have been submitting questions, and we've been compiling them in the background during the presentations. But first of all, did you guys want to say anything to each other? What do you think in terms of being part of different ecosystems, in observing each other's presentations? I mean, how does that play into effect when you're, when you have all these amazing players out in the space kind of doing similar things?
Maybe I'll go first. I guess me, Arjun, and Vijay, in terms of how we structured our presentation, it was very, very complimentary, and it really took everyone who's tuning in down the journey, right? I gave a more brief but introduction down the rabbit hole in DeFi. Arjun took them way deeper into DeFi composability as well as Legos, and then Vijay gave a very, very unique kind of twist in terms of how he views it from his point of view in terms of institutions. In terms of us doing different things, I think that's something that's needed, right? We might be heading down different paths, but at the end of the day, at the light end of the tunnel, it's all the same exit that we're heading for, where we're all working towards institutional as well as real adoption of DeFi as well as the blockchain technology. Feel free to disagree with me, guys, but I think that people need alternatives, right? Be it Ethereum or even Polygon or even Solana or anything. I think people need to have that kind of choices and that kind of freedom to choose where they want to onboard, where they want to put their funds, as well as which protocol in their point of view hits home to them the most, right? And we're all here to basically provide them with all these kind of alternatives and avenues for them to really, really choose to put their funds in, right? So that's my personal thoughts.
Yeah, no, I kind of agree with Julian there, especially the fact that all of us are trying to solve the same problem. Like all of us are very passionate about blockchain technology. We want this technology to succeed, and then and the future is going to be multi-chain. People want alternatives. It's always a good thing. This is why cross-chain bridging nowadays has become such a hot topic, because everybody's kind of accepted the fact that it's going to be multi-chain the future. And this is kind of also interesting that because so many different approaches exist towards solving the same problem, the probability of the problem getting solved is higher, right? So this is something we've seen in everything, whether it is the advent of electricity or whether it is the advent of the internet. When there are multiple approaches, then that's how the world converges towards what has to be like the best solution. So this is the best case scenario, the fact that there are many different chains out there. All of them have great, amazing teams. All of them are building furiously towards trying to get users. I think this is the best case scenario for the blockchain ecosystem in general, and this will benefit the users the most. So I think I'm on board with that for sure. And with respect to DeFi also being very interesting, because what we've seen is, like, again and again, the level of, let's say, malaise which is there in financial ecosystems globally, that people, the general populace, deserve a better option. Decentralized finance is in my opinion the future, because the current financial system is so hedged towards benefiting a certain class of people. It is also so hedged with so many entrenched players who are just not willing to give up control, that something had to change. And this is kind of where DeFi comes in and is trying to essentially take all of those different benefits and put that power and put those benefits in the hands of the community. And in my opinion, that this mission by itself is worthy enough that everybody should spend their time trying to solve this. So that's why on the DeFi side it's just so important that all of us sort of try different things and present different options to users, so that the best so that the users benefit the most. So those are some of my views on this.
Vijay, did you want to say anything in terms of being a VC and of course listening to these different ecosystems?
Yeah, definitely, because I see that a lot of people who are into crypto, they are seeing things from the crypto angle only. But I've I've led like a lot of projects from startups to multi-million-dollar enterprises, and I know their mindset. Their mindset is not easy to change. We are talking about user, what user feels. Like when you want to open a bank account, right? How do you open a bank account? Or suppose you go to a different country, new country altogether, and you want to open a bank account over there. It's not easy. You need to hire a lawyer or you need to hire a company secretary to do stuff for you, right? But within DeFi, what if users get to know? It's all about regulations. If regulations are in place, what user need to do, it doesn't need to do, just create a wallet and jump into the DeFi space. Just get some understanding and jump into the DeFi space. That's it. What he needs, like I said, he needs four things. He needs internet, he needs electricity, he needs smartphone, and he needs to make sure that what is DeFi, just the definition of DeFi and the application he wants to jump into. And like Arjun said, multi-chain and on-chain. Like suppose I deposit $10 million into JP Morgan. Okay, let's take an example. So can I move that $10 million and I've invested into different portfolio, equity, bonds, commodities, and all. Can I move that $10 million very easily to Goldman Sachs? No, it will take me months to do that. I have to liquidate either my portfolio or I have to transfer my portfolio to Goldman Sachs. And then in order to do that, there will be some portfolio also which I cannot transfer directly due to some regulatory restrictions. But within DeFi, what we can do, like multi-chain is there available. I can immediately transfer my $10 million from BSC to Huobi to Polygon or reverse. So if multi-chain, on-chain is available within DeFi, it's far more simple, far more easy to use, efficient, transparent, and secure than the traditional world, for sure.
Great. With that said, I wanted to open this up to some of the questions that are being put out there. So let's start with this question. It is from Chimdi. His question is on Arjun's presentation and the ZK technology. Will the ZK rollup enable inexperienced developers to build on projects on their platform? He would like for you to throw more light on this.
Sure, definitely. So I think ZK technology is already out there. Like there are solutions, there are zero knowledge solutions out there already, especially on the ZK rollup side. I think here the what would make it right, something which is where you have EVM enabled ZK, right? So and what that would mean is that all of the existing code which we have within EVM and all the ecosystem tools which the developers are used to, they will be able to use the same tooling, but also be able to use sort of the ZK rollup technology. So the form of ZK roll also at Polygon. So yes, so it will be easy for developers. The version we are looking to develop will be basically the same as Ethereum and all of the same tooling and all of the same, let's say, opcodes you're used to, you will be sort of using the same environment. So yes.
Okay, great. Next question is from Banchika, and this question is to Julian. Layer 2 clearly looks like the future, but how do we see future of DeFi in a highly speculative market where one bad news makes things go south? I have trouble understanding market investors who sell so low. Bitcoin still marks a season for market, bear or bull. Did you understand that?
I might not be able to get the last part, but yeah. Here's my interpretation in terms of the question that you asked. Multi-chain and layer 2s are definitely the way to go, right? It might be introduced and done in several ways. One of them is obviously the ways that Polygon has been going about doing it. But there's a couple of other ways. It might not exactly be like a layer 2. It could be like, say, sidechains, right? And that's what some of the GameFi projects have already been doing, creating their own sidechains as that kind of layer 2, while their main anchor actually sits on the layer 1 protocol, right? With regards to the investment or the price speculation side of things that the user asked, personally for me, I don't really like to comment on in terms of the price speculation of crypto assets. For me, it's always a long-term kind of thing, right? If you ask me, I think the blockchain wall, as well as the cryptocurrencies that are out there, is very transparent as compared to traditional finance in terms of the fiat money that they've been printing and all that kind of stuff. At least on the crypto side, if you're looking at the token itself, right? You would be able to see right away from the code whether it has some sort of inflationary supply or a fixed supply, right? And if you're actually investing in a fixed supply, if you honestly do believe in blockchain technology as well as the adoption of cryptocurrency and blockchain, like all of us here do, then for me, it doesn't really matter about selling even at the lowest, or it doesn't really matter, because every time someone sells low, is a dip that someone else is going to buy up, right? And we're all looking at that. As the demand actually grows and the supply remains constant, then in the longer run of things, the price is definitely going to go up if you're just looking at the price itself, right? For me, I'm a firm believer of crypto and all that kind of stuff. So if Bitcoin goes down to 30,000, 20,000 again, I mean, it's definitely a buy for me. So it doesn't really matter. Or I don't really try to understand why do people sell. For me, it's just another buying opportunity.
Yeah, no, that definitely makes sense. So the next question is from Derek K. It's for VJ. The question is, mapleblock Capital has invested in multiple blockchain platforms like Algorand and Polkadot. What is your outlook on the future of various layer ones? Do you see multiple layer ones being successful in the future, or just one or two of them emerging victorious?
Yeah, of course. I think it can't be one, right? If we are talking about decentralization, we cannot say one blockchain will survive only or two blockchains will survive. We are talking about decentralization here. So there have to be multiple blockchains that coexist with each other, and we can transfer the tokens between one blockchain to another blockchain. Definitely, right? So, and having said that, when we invest in the project, it is not necessary it has to be a layer one blockchain or layer two blockchain. It can be a long infrastructure project, or it can be a side chain, or it can be a small app, or it can be a small dApp also. It can be a wallet, Web3 project also, DAO ecosystem as well, which is growing, which is very good for the entire ecosystem. So it's not necessary the layer one blockchain, one or two blockchain will survive. There will be multiple blockchains, layer one blockchains, and on top of that, there will be multiple layer two blockchains as well. And yes, we do invest in every area, every region, irrespective of the color. As long as founder is passionate, they know their vision, they are able to deliver what they are talking about, then definitely we invest. And we do invest 1 out of 20 projects that are able to pass through our due diligence, which is very, very strict as of now.
Great. By the way, so I know that some people have been asking for the slides from the different from the presentations. So afterwards, if you want to make your slides available, that'd be great. I know our community's been asking for them, but we can talk about that later. The next question is for I'll go down the list. Julian, this is from Ezra B. Valentine. The question is, we all know that one of the issues of BSC is self-custody. Please, what are the measures that are being considered to solve this challenge? As we all know, many people who through carelessness or accident lose their passphrases cannot recover it again. So what are the measures that BSC are trying to put in place to solve this?
I think it's not just a matter of measures that BSC can actually put in place, right? I think it has to be a lot to do as well with the people that are providing this kind of wallets or security kind of solutions to the end user on BSC, right? In terms of the wallets, I think we have gone a really, really long way from just using, cold storages, wallets, and now we have a lot more. We have multi-sig, and then, we have that kind of cache phrase. And I would assume that as time goes by, it gets easier and easier, right? I think in 2016, 2017, MetaMask was still a fairly new thing. And now, you can keep all your crypto assets within your browser itself or within your computer, right? So that's one portion of things. The second portion of things is obviously through the blockchain, right? From BSC perspective, we're definitely working with more kind of wallet providers like Trust Wallet, Taurus, Xerion, and that kind of stuff to actually try to ensure a really, really smooth experience for users to actually self-custody those assets, right? I would say, we might not have that kind of foolproof solutions where, the cache phrase and all that kind of stuff could easily be substituted with something else. But I did come across few projects that have started to look into like Gmail integrations, single sign-ons, that kind of stuff to actually help to custody those funds, right? So I would say that in time to come, and I'm pretty sure that this solution that I was referring to is not just building on BSC, right? They're building on Polygon, they're building on Solana. It's really for the entire blockchain ecosystem space, anyone who's using blockchain, right? So what I can say is, just be patient. Everyone's trying our best to build to make the user's experience as smooth as possible. So you just have to be patient.
Great, thank you. The next question is for Arjun, and the question is from Liwei Tan. Question: congrats on Polygon recently surpassing Ethereum's daily active addresses for the first time. Most of the people using Polygon are fairly tech savvy or quite deep into crypto, having to bridge over assets from ETH and setting up their MetaMask, etc. My question is, in the future, do you foresee it possible for the everyday person to easily DeFi or swap on Polygon without requiring all the steps that are currently required?
Great question. And I did, and this is definitely something which is so important to enable like mass adoption of DeFi. So what you've done at Polygon is that number one is we've tied up with lots of different fiat on-ramp solution providers. So you can use Wire, you can use MoonPay, you can use Simplex, and there are a few other fiat on-ramps where you can easily get crypto directly onto Polygon. Secondly, we also have many integrations with centralized exchanges. In fact, one with Binance as well, where you can take Matic tokens from Binance to Polygon. You can also take other assets from exchanges like Xend, KuCoin, and from many other centralized exchanges. You can take assets directly onto Polygon. So we are trying and to solve like this sort of problem so that it becomes easy for the average user to use, let's say, DeFi on Polygon. We also have integrations with many, let's say, very popular wallets as well. So for example, Trust Wallet, which has one of the largest communities, is integrated into Polygon, and you can access DeFi from Trust Wallet. So we are building these integrations to make it easy for users. I think the next step for us would be to put lots more information out there and create many guides so that it becomes easy for people to navigate the DeFi ecosystem. So there's several things we're doing, and I encourage you to look into these different options. So yeah.
Great, thank you. The next question is for VJ. It's from Evans Uba, and his question is: one setback with decentralized finance solutions is on-off fiat solutions. What ways do you think this can be bridged?
So right now, if we see, like I mentioned in my presentation also, the fiat money comes into the centralized exchange. Like how I do it myself. I put it into the centralized exchange. I convert into a crypto coin, either the stable coin or crypto coin, right? And then I invest as a VC, right? Or I have third-party integrations who converts it on my behalf, and I do it. So right now I don't see that, first of all, there is a limit, right? If you're a licensed authority from US or somewhere, like Binance US is a licensed exchange, you have the limits, right? You cannot accept $1 million, you cannot accept $10 million or $100 million straight away. And then you say that I want to buy the cryptocurrency. So there are limits right now. So these limits will be imposed on as and when we see there are more regulations coming into the market, or less volatility, or there are more reasons to justify the valuations of various technologies we have in the market right now. So yeah, having said that, I feel we are not near to that, but it's going to happen for sure. And it will only happen when the governments will start giving more crypto licenses. But you can do it in specific countries like Indonesia. You can have access to IDR, Indonesian rupiah, which is a fiat currency. In Dubai, you can have access to dirham, AED, right? In India, you have access to INR already. Like WazirX is acquired by Binance. They do have access over there, right? So in few countries, you have that access. But if you tell me that within the same platform, Euro, GBP, USD, INR, IDR, everything should be there. That is only possible through third-party integrations, which Polygon is doing, like MoonPay and all. But if you say that there has to be such platform to do that within the defined crypto ecosystem, for that regulation has to be very clear, which is not yet there. So that will still take 3-4 more years. I think 2-3 years at least that to happen.
Great, thank you. The next question is for Julian. The question is from Tapeset. Most of the NFT and DeFi projects with farming and mining concepts are sometimes unsustainable as they have no intrinsic token value that benefits users in the long run. Can guaranteed profits for its users have a high token value and can be used in the long term until later?
I think it really boils down to the individual projects kind of tokenomics, right? A lot of these, if you're talking about GameFi, there's a lot of projects that I've come across that are actually building their games, not just on BSC, right? Some of them are in Ethereum. I'm sure Arjun with Polygon, you've seen your fair share as well. Some of these projects, a lot of them come from the traditional kind of game developer kind of background, right? A lot of them don't have any much experience in designing those kind of tokenomics, right? And I mean, if you look at X Infinity, even for them, they paid Delphi Digital a lot of money to actually, properly work on those tokenomics, right? So for these projects that actually come in, do great games, and did not put in much thought into the tokenomics, what will happen is that they might grow too big too fast. The token price goes up because a lot of people are buying them to use and play the game. And then, one day, either because of several issues, it could be gas fees or it could be unsustainable tokenomics in terms of the rewards mechanism or the token supply, etc. But a lot of times what I've seen is that these projects end up with unsustainable kind of ecosystem. And what happens after that would be, the token prices capitulate on the open market, right? So I think tokenomics is definitely something that all these GameFi projects or anyone that's looking to invest in such kind of projects, whether it's DeFi, GameFi, and all that, you would have to really look as well as understand the tokenomics, right? Understand the utility of the token. Most of the time, if the utility is too good to be true, you probably might want to think twice, right? And why I say that is because obviously, this is a fairly new kind of field that we are venturing into. A lot of times, if you look what happened recently with SafeMoon, a lot of new tokenomics kind of concept is coming up, right? And a lot of times, these new projects, when they come up with a brand new tokenomics, a lot of people do not understand, right? So I would say if it's too good to be true, think twice. But yes, the answer to your question is that I do think that there are a lot of projects out there that have really good tokenomics as well as economies, right? And what that usually transcends into the token value is that when you have a really good, sustainable, as well as efficient kind of token economy, it would eventually translate into the token price, right? So it's like no difference from buying a stock or anything, right? You really have to understand the background, what the company is doing, and that kind of stuff before you actually make your investment decision. Yeah.
Great, Julian, thank you. And finally, we can keep going on all day, but I'm going to wrap this up. There's the last question. Last question goes to Arjun. It's from Jazz. The number of projects in free-to-play NFT and gaming on blockchain has seen sudden surge. We see Polygon in support of this revolution. Can you comment what it might mean for overall growth of DeFi industry?
So I think so one thing which is very unique about NFT, or rather two things, right? So two things which are very unique about NFT and gaming are, number one, that they are attracting a lot of users to blockchain technology who would otherwise do not fit the profile, right? So a lot of artists, a lot of people who are not necessarily into technology are now discovering and reading about blockchain technology. So NFTs have this interesting power to attract a very different kind of demographic. And similarly, gaming, and one of the reasons why we also are very bullish on gaming is because gaming has this power to, again, get tens of thousands of new users into blockchain. And all of these users, the moment they're into blockchain technology, they're playing, let's say, you're playing Axie, right? You're earning SLP tokens. Now you want to figure out what you want to do with them, right? And this is kind of where the discovery starts. So even people who may not be typically, let's say, DeFi users would then end up discovering DeFi. And I think that is why NFT and gaming is very interesting for me, because it has that potential to get in those user groups into blockchain technology. And this would eventually help sort of DeFi grow even further, right? And would add like new kinds of and new users and new dimensions to DeFi. So that's I think where NFT and gaming plays like a very interesting role. Yeah.
I think Kevin is not there.
Yeah, it seems like Kevin dropped off.
Yeah, hello everyone. I think Kevin is having a little bit of some internet challenges. Yeah, but thanks Julian, thanks Arjun, thanks VJ. I mean, I'm really excited to have like everyone here. Like it was a great honor to have everybody. I mean, when we were trying to think about this, it was almost impossible, you know, trying to get these very big platforms all on one stage, you know, to just share their ideas, share their thoughts. But it was really amazing to have everyone here. Super excited for what the future holds for DeFi, and also for how, you know, we can bring the regular individuals right into the DeFi ecosystem. Super excited, and thank you very much for making our time for us today. And also thanking the audience, you know, the people that asked very brilliant questions. In fact, I had to take notes, you know, because we have at every point in time, being a builder, we always try to listen to what people say, try to see their pain points, and try to constantly develop, you know, solutions that really meet their needs. And I'm super excited. I learned a lot today. And yeah, I'm very happy to have all of you. So thank you very much. Okay, I think Kevin is back. But yeah, thank you very much, everyone. I think we'll call it a day. Yeah, thanks.
Yeah. Hey, everyone. I just want to say thanks a lot for everything today. So follow, if you're still out there watching, follow us on our Telegram or on our Twitter at Xend Finance. And we will have those presentations for you. You just have to make sure that Julian and Arjun and VJ on the spot, but a lot of people want to see those presentations. So we will be, I'll clear it with them. And then once we have them, we can present them to you if they're willing to share that with everyone else. But thank you again for joining us, how to bridge real world solutions with DeFi. And we'll see you for the next panel session. Thank you, everyone.
Thanks, Kevin. Thank you, Xend. Thank you, Hugo, for having us. Thank you.
Thanks for having us. Thanks, guys.
Thanks, guys.
Thanks, guys. Take care. Thank you very much.
Bye.